Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I welcome you to another installment of the Extreme Speed Live technical analysis session as we are going to be taking another fresh new look at the financial market. But before we begin, I would love us to run through our daily routine to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. If you type in hi in the comment section, I get to get a feedback that we are all on the same page and I am good to go at this point. So while I load up my chat, I would love to see some comments and let's get this session started. So I can see I have a handful of comment right here. That's interesting. I can feel the energy pumped up for today's trading session. So first here, I can see Scorpion94. Good morning to you. Alex JJX, Kutimar. Good morning. Thank you very much. Monizi4 Ephraim. Good morning to you. Thank you very much. Who else we have here again? Hey, Carrie. Good morning to you. Glad to have you around with us this morning. Then I can see Venki 1946, Ephraim again 237. All right. I will take this as a positive confirmation that we are all good to go this morning. And it's on this note, I welcome you once again to yet another promising edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be dissecting the current market structures using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement within the asset structures on our watch list. Well, so far this week, we have been monitoring four major assets, which includes the US All Spot, the USTech100, which is popularly known as the NASDAQ. We also have the GBPUSD and the XAUUSD, which is, of course, known as the gold spot. And in fact, we've had quite an interesting scenario going on across board in the last 24 hours, which I'm very excited to share with you this morning, as we are going to be looking into the structures and see how we can manage our existing positions if we have any, and of course strategically position ourselves ahead of the New York sessions today. Well, before we go in, I would like to appreciate and welcome the newcomers in the house. For those of you who are joining for the first time, you are highly welcome on board, and I'm very excited to have you around with us. And then I know you will be asking, what is this all about? Well, as technical traders, we gather here on a daily basis in anticipation of the New York session, where we come to review our existing positions, if we have any, see how we can manage our positions, and of course use the data we can see on our chart at that point to strategically position ourselves ahead of the New York session. And this, of course, happens on a daily basis. 11 a.m. West African time, 10 a.m. UTC. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today. And of course, be part of the subsequent editions, as the more time you spend with us, the better you become in understanding our strategy in this community, and of course be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. So with that being said, here we will be diving right into the business, and as usual, the first thing we usually do is to check on the economic calendar. And for those of us who have been in the community for a while, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves strategically ahead, prior, during, and even after these economic events. So right here on the economic calendar, we usually focus on high impact events from economic dockets that affect the asset on our watch list. And based on the asset on our watch list for this week, we shall be focusing on both the United Kingdom and the United States economic docket. Now for today, October 24, in fact, we have a handful of high impact events to look forward to. And in fact, we're beginning to see trickles of events already lined up during the from the United Kingdom economic docket. So for today, we have the claimant count change, the employment change, and of course the ILO unemployment rate, all of which are data that gives us insight into the labor sector of the United Kingdom. So from the data we have here, though there are mixed reactions, as we have the employment change and the higher low unemployment rate coming in a little bit beyond the previous data and giving us a positive insight into the expansion in the labor sector, which is something positive for the United Kingdom. So we are going to be looking at how the market has reacted to this event. Then we also have the S&P Global publication for the CIPS Composite PMI, the manufacturing PMI, and of course the services PMI. For some of us who don't know how important this event is, well, look at the Composite PMI, for instance. This is a key economic indicator that offers insight into the overall health of the United Kingdom's economy by combining both the manufacturing and the services sector purchasing managers indices together. Then we also have the other one which is coming in, which came in, of course, and that is the global manufacturing PMI, which indicates the health of the manufacturing sector alone. And a higher reading is considered as positive and suggests expanded economic activity, which of course offers insight into the overall economic growth. Then the services PMI gauges the well-being of the services sector, and of course a higher reading signifies growth in the sector, providing a window into broader economic health. So you will see here that the S&P publication from the United Kingdom for the manufacturing sector, it shows that we had an expansion in that regard as the data came in beyond expectation on that one. Then for the services PMI, we had a contraction there. So it's more of a mixed reaction, but in total, it's more of a positive light to the United Kingdom. So we are going to be looking at how the pounds had reacted to this event. Then later today, I think in about 2 hours from now, we are going to be witnessing the S&P Global publication in the United States too, for both the manufacturing and the services PMI. And both data here are suggesting a little bit of decline from the previous month data, which is a sign that we might likely be seeing some contraction in that regard. So we are going to be looking forward to what the actual data is going to be there too. Will it be just as expected, below expectations, or even beyond expectations? But as technical traders, you know what we do here. We want to be going into the chart to sniff through the current market structure and look out for patterns and structures that we can use to guide our trading decisions, as we all know that even the anticipation of this event alone has a tendency of influencing the market sentiment, which will reflect on the chart as price action. Now, talking about price action, we are going to be starting the week with the first asset on our watch list, which happens to be the US All Spot. I don't know why every time I try to load up my US All Spot chart, it takes quite a while before it comes up. So let's hold on a little bit and let's see how this goes. All right, finally we are here. So on the US All Spot, we have quite an interesting situation going on in the market right now. From the fundamental aspects, remember yesterday we had the buy position triggered yesterday. Okay, I had a buy position triggered. Okay, we did have the buy position triggered after price action broke out of the $87.50 area. So the week started on a negative note for us as we saw our buy position taken out at a loss. Then, since that moment, prices have been trading below the $87 area and have dropped further as tension is in the Middle East. And the potential for further decline in oil prices still exists if the Israel ground offensive is completely cancelled due to the pressure from the international community. Well, currently we have a sell position running as a result of the breakdown of the support line of that range we identified during the live session yesterday. So let's quickly look at how the week began for us all in this community and what led to the decisions we made so far. So right here on the 1 hour time frame, the first thing we observed at the beginning of the week was that beautiful consolidation phase, though the new week started on a bearish note as we saw a bearish gap leading to a situation where price dropped from the $87.50 area into the $86.60 level. And as soon as price got into the $86.60 area, we saw buy pressure resume, bringing price back into that level where it started the week, hereby giving us a flat channel to work with. And of course, you know how we do it in this community. Whenever we notice this kind of flat channel, where in this case scenario price is confined within the $87.50 level and the $86.60 area, we do want to exercise patience and wait for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And of course, we did saw the breakout of the resistance line, which triggered our buy stop order. But unfortunately, we saw selling pressure come in, taking us out of that position in a loss. And this led into the scenario we had here, where price did broke down the support line of that range to trigger our first sell position for the week. And since that moment, we have been looking out for selling opportunities. And if you remember vividly, we also talked about the $85.50 level, where we were looking out for more opportunities to sell if price goes on to further break down that structure. Now, if we look at the positions we have right now, if you took advantage of that sell positions, well done to you for being on standby, as you will currently have about 90 pips running from the first position, while the second position is currently running in a loss of about 17 pips. So presently we have a total of 80 pips in profit. And one good thing about this is that we were able to recoup the loss we incurred from the buy position we took advantage of at the breakout of the $87.50 level yesterday. Now, at this point in time, you know how we do it. The next thing we want to be doing right now is to ensure that we move our stop losses and secure the current sell position. And the most appropriate area I will be suggesting at this juncture is that area anywhere around the $86 zone. Move your stop loss around that area, and please note that we do want to be giving enough room for price action to breathe, so that whenever it does the retracement thing, we can still have enough space to still be in the trade if price will intend to go to the downside. So now, with a well secured position at this juncture, what is going to be our next line of action for today? Now, in the past 11 is it 11? I think about 15 to 16 hours now, you would have noticed that sellers have struggled to break through the $85.50 level, indicating a possible weakening of the downward bias in the very near term. And considering this, we need to be very, very careful, as it's very likely that buyers could take over the market anytime soon. Now, look at what has been going on around that $85.50 zone. You can see what has been happening here, though we had a breakdown of that structure, but at every point in time, we saw the presence of buyers negating all attempt by the sellers to go further to the downside. Now, for me at this point in time, I'm beginning to feel concerned that buyers may likely come in. But before we go into the details here, and for the sake of those who missed out on our session yesterday, let's quickly run through the higher time frame so that we can all be on the same page and at the same time have an holistic perspective into what is really going on in this market. Now let's go back into the higher time frame. Now at the beginning of this week, we were analyzing the 4 hours time frame, and in fact what we did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of September. And the first thing we observed here was that beautiful trend continuation pattern, which from a theoretical standpoint projects that we get ready to sell. Now, to give a visual representation of what I'm talking about here, so we saw this impulsive move all the way into the $81 area, and since then we saw price consolidate, hereby transitioning into what looks like a falling wedge. And in this case scenario, whenever we notice this kind of structure on our chart, it more or less suggests that price is likely going to the downside. And what we are going to be looking out for from a theoretical standpoint is the breakdown of this support line of that wedge, which has already happened. Price coming back to retest the structure where continued selling pressure has a high chance of inciting a sell-off, and it appears things are going in line with these expectations, as you will see here. Then in addition to this pattern, we noticed here is a key level which we said we were going to be using to guide our trading decision for this week, and the key level we were able to spot here was exactly along the $87.50 area. Now, the most important thing about this level is the fact that it had played a major role in determining the direction of price action in the last 7 to 8 weeks. Now, if we go to as far back as the month of September, we saw how this level here had played a major role in pushing price to the downside, negating all attempt by the buyers to break out of that structure. But fortunately for the buyers, a breakout was possible during the second week of September, and since then throughout the month of September, price was trading above that level until the first week of this month that we witnessed the breakdown of that structure to the downside. And since then, price has been trading below that area, unless for last week trading session when we saw the breakout, and right now price is back below that level. Now, for the fact that price remains below our key level, you know how we do it in this community. We want to be looking out for patterns and structures that supports the idea of selling. Now, if we look at the breakdown of that key level and that support line, you will see that price dropped into an area around the $85 area, which has been peculiar with buy pressure since last week Monday. Now look at what has been going on here in the last 24 hours. Buy pressure here, buy pressure here. So sellers are finding it difficult to break through, just like it did this same time last week trading session. Now, the inability of sellers to break through is a sign that that area is holding a lot of buy positions at this point. Now, the question going into today's New York session is, Will the buy pressure we are observing here incite a situation where price climbs back into the neckline, into the key level, which interestingly shares a confluence with the ascending trend line, that is the support line of that trend continuation pattern, probably to incite a downtrend scenario. So we want to look at this on a lower time frame to see if the buy pressure persists here. We might be looking at price retracing back into structure, which will be dovetailing to about 90 pips, after which we want to see how the market will be reacting to the zone to determine if we are going to be adding more buy position if price breaks back above the ascended trend line, or get ready to sell if we continue to see selling pressure below the structure. Now, to have a better perspective into what is going on here, we would like to scale down into the lower time frame to see how market participants have been reacting to that area between the 85 and the $85.50 zone. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. So let me zoom things in a little bit, and here we go. So we can see the $85 area here, and in fact you see how sellers have been struggling around this area. So at this point in time, I would like to identify the zone as a temporary demand zone in the meantime. So we want to be labeling this one a temporary demand zone. So hold on a second while I label this. So we have a temporary demand zone here, and then that is the area between the 85 and the $85.50 zone. So this is going to be serving as a temporary zone for today, and if price action continues to trade below the structure, above the structure today, then we want to be looking out for buying opportunity and selling opportunities only if price action goes to break down, retest the structure to the downside. Now, in addition to that temporary demand zone we've just identified here, is the descending trend line we spotted here at the beginning of the week. Now, look at what we saw here from last week Friday. We saw lower highs, as you will see, and in fact we had a couple of descending trend lines to emphasize the bearish pressure since last week Friday. And of course, you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that supports the idea of selling. So for us to sell and continue be in a sell position at this point, we want to see price action go on to take out all the buy positions within the $85.50 zone, retest of structure as long as price still remains below that descending trend line to be part of a downtrend continuation. However, if you look at what has been going on here in the last 16 hours, it is quite clear that sellers are struggling within the zone. So in that regard, we are at a crucial juncture in the market. As you will see, price appear to have broken out of that descending trend line to emphasize that buyers are trying to break out of the zone. And this is basically one of the reasons why I have said that for every one of us who had hold on to a bearish position, please ensure you secure your position at this point in time as buyers go take over the market anytime soon. Now, for us to buy this commodity today, definitely we want to see price action break out of that trend line. That is, break out of the trend line, retest it to incite an uptrend situation. Now, with what we have seen here in the last 1, 2, 3, 4 hours, it appears we have a breakout already of that descending trend line. Price came back to retest the structure, and in fact, if you look at the nature of this candle right here, it's more or less it's an hammer candle, which from a technical standpoint reveals the strong presence of buyers in the market and further emphasize that sellers are unable to settle below that $85.50 area. So in that regard, I want to be shifting my bias into a bullish momentum at this point. Now, how do we intend to capitalize on that uptrend move? Now, let's bring out our line chart. As you will see, price has been consolidating between the $86 area and the $85 zone. It is a $5 zone since yesterday's trading session. Now we want to mark out the zone. Now we have the resistant level of this zone just exactly at that psychological area, at the $86 zone. So I would like to give this a wine color to emphasize and differentiate it from the previous lines we have here. So we mark this level out, which you want to do, of course, on your chart. $86 level. Mark it out on your chart right now, as you will be needing them as a reference point to guide our trading decisions for today. Then we also have the support line of this range around the $85.30 area. So we also want to be marking out this one too. Then we are going to be bringing back our line chart to confirm that they are touching all the pivot lows and highs here. So the resistance line is quite on point. So the support line here, let's bring it to as far as this level. That's the $85.20 level. So we have a beautiful range to work with for today's trading session. So for today's trading session, our center of focus is basically going to be between the $86 area and the $85.20 level, where depending on the direction of the breakout today will determine where we are going to be going. Now, to capitalize on this, you know how we do it whenever we have a range identified in the market, which emphasize the level of indecision going on. We do want to exercise patience and wait for either the breakout of the resistance line here to give us an opportunity to buy, or the breakdown of the support line, which of course will be back into the seller's territory right below the descending trend line to incite a sell-off here. Now, to position ourselves for today, I'm going to be looking at buying above the $86 area, just right here. Let me zoom this out a little further so that we can see things more clearly. So I'm going to be looking forward to buying at the breakout retest of the $86 area for today's trading session. And if price continues to climb up, then a breakout of the $86.60 level will be welcoming more buy positions. And if price continues to climb further, then a breakout of the $87.50 level will welcome more buy positions here. So that is how we are going to be looking out for buying opportunities. So anywhere above the structure, we look out for buying positions. And of course, you definitely want to be having your stop loss very, very important. Remember that every decision we are making here is an educated guess until the trade ends. So have your stop loss right below the $85.50 area, which will be dovetailing to between 45 to 50 pips, which is not bad at all for that bullish momentum. Now, in as much as we're looking out for buying opportunity, because price is above a very important demand zone here, we cannot ignore the potentials of sellers. So if it so happens that the support line of this range is broken to the downside, well, a retest of structure will be confirming that sellers may likely be dictating the pace. And secondly, if a breakdown happens, price will be back below that descending trend line, which will be in alignment with a bearish expectations. So let's mark out these levels on our chart. It's a simple setup. Our center of focus for today's trading session is between the 86 and the $85.20 level. And like I said earlier, the direction of the breakout here will be leading us to where price will be going. So let's get ourselves prepared, mark out this level, position ourselves, and be on standby to capitalize on the next move. So this is my view here on the US All Spot for today. If you have any questions whatsoever as regards to the current setup, or you need me to do some further clarification to an aspect you really do not understand, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds off to wait and see if you have any questions whatsoever, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, I see your comment. Sepetis, good morning to you. Cast66, good morning to you too. Glad to have you around with us. We have Babaz, good morning to you. Have two, good morning. Marvin Garcia, good morning to you too. So let's move on to the next asset on our watch list. So the next asset on our watch list is going to be the USTech100, which is popularly known as the Nasdaq. And in fact, we have a beautiful buy positions currently running in this market. Remember, yesterday we were looking at the potentials that sellers could likely come into this market, which of course we are going to be talking about in a moment. So let's run through what really happened yesterday and what led to the idea and decisions we made so far. Now, at the beginning of this week, we were able to spot a range where price was initially confined within the 14,615 level and the 14,545 area, giving us a beautiful flat channel to work with. And of course, you know how we do it in this community. Whenever we have this kind of uncertainty where price action transitions into a range, we want to exercise patience, waiting for either the breakout of the resistance line for buying opportunities or breakdown of the support line for selling opportunities. Now, prior to our live session yesterday, we already had a breakdown of the support line. Price went on to break down that key level at the 14,500 with an engulfing bearish candle to incite the idea that we will be looking out for selling opportunity. And if you recall vividly, I made mention that I already had a sell position triggered at that point in time, and that for those of us who missed out on that opportunity, that we would like to exercise patience and wait for price action to come back into the zone where the appearance of selling pressure will be welcoming selling opportunities, which of course never happened. And one thing I said here yesterday is that if we begin to see signs that buyers are building on momentum leading into the breakout of the 14,545 area, we shall be getting ready to buy. And in fact, you saw what happened here. Just a couple of hours into the New York session, we saw buy pressure resume. We had a very beautiful hammer candle here, which revealed the presence that buyers are building up momentum, as you will see that the 14,430 area had continued to negate all attempt by the sellers to break through that area. Now, momentum was gradually shifting, and remember that the 14,500 area on the 4 hours and daily time frame was more of a demand zone for us, and we said that if price climbs up, we will be buying the USTech 100. And since yesterday, as you will see here, price had been climbing up, and we of course added more positions at the breakout of the 14,615 level. And in fact, if you had missed out on the breakout of the 14,615, you will see here that price action actually came back to retest that structure to give us a second chance to be part of that bullish momentum. And for those of us who took advantage of these buy positions, well done to you for being on standby to capitalize on this move. And currently, the first buy position is running with about 150 pips in profit, while the second buy position here is running with about 87 pips in profit. So we have roughly of over 200 pips in profit on the USTech 100, which is not bad to start the week with. Now, for those who took advantage of this opportunity, well done to you. And the next thing we want to be doing right now is to ensure that we secure this current buy position while we also give enough room for price action to breathe. And in fact, based on this current situation here, I will be suggesting that anywhere above that second entry at the 14,615 seems most appropriate to move all stop losses to. Secure your positions while we continue to monitor price action for new trading opportunities. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying the USTech 100, or are there chances that sellers could come in at any point in time? And while I was looking at the financial news yesterday, we saw that the Tesla, which is one of the top companies amongst the the top 100 in the US, which is amongst the Nasdaq here, had a growth of about 4% yesterday, which can be seen on the USTech 100 here, as the market is looking very, very bullish at this point in time. Now, before we go into the details of what our expectations will be looking like today, let's run through the higher time frame so we can have an holistic perspective into what is really going on in this market, and at the same time be on the same page, and at the same time allow those who missed out on yesterday's session to be on the same page with us. So our analysis for yesterday started from the daily time frame, of course, where we were able to spot a very simple setup on this chart. Now, it is quite obvious that since the beginning of this year, price action has been more of a bullish momentum. And to further emphasize this, we have a couple of ascending trend line which buttresses the bullish momentum, but the major one here is this one that I am highlighting on your screen right now. And in fact, we saw the first time price will break down that trend line happen last week Friday, as you will see here, giving us signs that sellers may likely come in. And this was as a result of the lower highs we have been noticing in the last 3 months. You can see price has been finding lower highs despite the strong bullish momentum, which has finally led to the breakdown of that ascending trend line for the first time this year. Then in addition to that trend line is this very important key level, which we said we were going to be using as our yardstick for trading activity for this week. Now you will see how the 14,500 level, a psychological level considering the round figure of that price, had played a major role for buying opportunities in this market since the month of June. Look at what happened here in the month of June. This was the first time price will break above this level, and since the breakout happened, we have seen how sellers have struggled to drop below that level. The same thing also happened here in the month of October. At the beginning of this month, buy pressure resumed as soon as price got into that structure. And during yesterday's trading session, the same thing has also happened, as we saw buy pressure at that area one more time again. You would agree with me that we are at a very crucial juncture in this market where buyers still have a say despite the lower highs. And in fact, if we consider the impulsive bullish momentum that have been gathering since the beginning of the year, we cannot negates the potential that buyers could still take over this market. Now, one of the things we were looking at yesterday is that since we already witnessed the breakdown of that ascending trend line right here, that we might likely see price retrace back into either the ascending trend line or the descending trend line here, where the appearance of selling pressure will be all we need to join the downtrend move. Well, in the meantime, let's see how far this bullish momentum will go. Will it get to as far as the ascending trend line or the descending trend line to incite another momentum, which of course will be dovetailing to about between 350 to about 450 pips to catch here. So this is where we are right now. We are in a buy positions. We have moved our stop losses to secure the position. Now the question at this juncture is, how far will this bullish momentum go? So now, in order to know that, we will be scaling down to the lower time frame to see how market participants are currently reacting to this current structure. However, I would like us to note here that if price at any point in time breaks down and retests the 14,500, this will be a beautiful opportunity to join a sell-off in this market. Now let's scale down into the 1 hour time frame to see what is really going on in this since the beginning of this week. Now we have a level here at the 14,750, which happens to be the highest point price action has been for this week, and we saw what happened when price got into that area. We saw bearish candle pushing price to the downside, maybe to retest the structure that was broken, and at this point in time I would need to see price action break out of the 14,750 for me to join an uptrend continuation. So for those of us, there are two ways to which we can capitalize on this uptrend continuation. For those of us who had bought at that level, we bought yesterday, and of course the 14,615 too as well, then you are already in profit at this point in time, so you can afford to risk some of the profits you had made so far and test waters above the 14,750. So having a buy stop order above that structure makes quite a lot of sense, and let's see if it's going to work. And if it doesn't work, we know that we are just risking some of the profit we made so far this week. However, if you are new with us and this is your first time taking a trade on the USTech100, then I will suggest and encourage you to exercise patience and wait for confirmations to happen before jumping into the buy position. Now, to give a visual representation of what I mean here, I want us to see a breakout happen. If you are joining for the first time, then wait for confirmations where a retest of structure in our lower time frame will be give us an opportunity to buy. Now, if the retest happens, remember that we want to look out for signs around this area that suggest that sellers are finding it difficult to settle below the 14,750 before we jump into the buy positions here. So that is how we are going to be buying the USTech100 for today. Now, to make things much more easier for us to manage the current position, let's have our trend line marked out on this chart. So let's look at this together here. I can identify some higher lows here. So we want to capture all the pivot lows. So we have the major trend here and we have the temporary one right here. So we have something. Let me do some little adjustments so that I can capture all this. So beautiful. So we have an ascending trend line to work with for today. So as long as price remain above both of this ascending trend line, we shall feel comfortable in a buy position. And note that price could still retrace back into the 14,615, which lines up with that major ascending trend line to incite an uptrend scenario. So these are scenarios we want to keep in mind while we continue to monitor price action and hope that price will continue to the upside. However, in as much as we're looking out for buying opportunities at this juncture, we cannot ignore the potentials that sellers may come in. And sellers have been trying to break down the 14,500 for a very, very long time, which they were successful in doing yesterday. But I think majority in the market saw this level or this zone as a cheap price to buy one more time. And if at any point in time today price breaks down, the ascending trend line here and the 14,615, which shares a beautiful confluence, well, a selling opportunity will be coming in. Now, remember that we are not going to be getting too excited at that juncture, as we are not having a sell stop order there, because price could, a breakdown could still turn out to be a false breakdown. So we really need to confirm that this breakdown is valid. And to confirm that, we want to look out for confirmation signals, and this would reflect on the chart as price coming back to retest the structure, where continued selling pressure here reveals that buyers are finding it difficult to climb back above the ascending trend line to give us a beautiful opportunity to join a decline to the downside. And if price continues to drop, breaking down our key level at the 14,500, remember that level to be a very strong demand zone on the higher time frame, then we want to be adding more buy sell positions. So things are looking very bullish at this point in time. I'm holding on to a bullish bias, waiting for more opportunities above the 14,750. But if price breaks down that ascending trend line, breaks down the 14,615, retest the structure, then we have no other choice than to join a momentum shift. So that is how we are going to be managing our positions on the USTech100 today. So I do hope that you mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions or you need me to do some clarifications to this current structure, feel free to let me know in the comment section. So I will be waiting for your comments, and you can as well, I'll be taking the next 10 to 15 seconds, and you can use that time to also mark out these levels on your charts. All right. So in the absence of no questions, I do want to assume that we are all on the same page here, and that all I said as well is comprehensive enough. And I do hope you are able to mark out these levels on your chart too as well. So let's move right into the next assets on our watch list for today. So the next asset on our watch list for today is the GBPUSD. A very phenomenal move we witnessed here yesterday as price action moved over 200 pips with two buy positions triggered at both the 1.21660 level and the 1.21800 area. So let's quickly run through how yesterday started. And in fact, I would also like to state here that the fundamental factors are actually still supporting the pound sterling, as this pair is currently benefiting from a weakened US dollar and a positive shift in risk sentiment at this point in time. Now, despite the UK higher low unemployment rate dropping slightly to about 4.2% in the quarter to August from a previous 4.3%, the data failed to significantly impact the pound sterling during the early hours of today. But at this point, we're beginning to see some movement in this chart right now, which looks more like the retracement of that impulsive move. So let's run through the current structure and see what has really been going on since the beginning of the week and what led to the idea of buying that asset at the beginning of this week. Now, the first thing we noticed here yesterday, if you remember vividly, was this range. As you saw here, that price action was caught within the 1.21660 level and the 1.21450 area to emphasize the level of indecision at the beginning of the week. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we do want to exercise patience and wait for either a breakout of the range to happen to give us an opportunity to buy, or the breakdown of the range to happen to give us an opportunity to sell. And of course, you saw here that the breakdown never happened. And in addition to that range, we had a descending trend line which has been supporting the bearish momentum in the last couple of weeks here, marked out and slices through that range. And in fact, if price breaks out of the resistance line of that range, it would have also broken out of that descending trend line to give us a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. And this led to our first buy position for the week as we saw price break out of the 1.21660 level, our first buy position. And then we also had another level at the 1.21880 area where we said we shall be adding more buy position. And of course, you saw what happened. Price moved astronomical to the upside. The first one moved over 120 pips, while the second one moved over 100 pips, giving us over 200 pips in total before this bearish momentum happened. And of course, if you had followed our instruction here, that is move your stop losses accordingly whenever price action move very well in your favor, you must definitely have been taken out of the buy position at this point in time. And well done to everyone who took advantage of this buy opportunity and moved their stop losses accordingly. So with that being said here, what is going to be our next line of action for today? Well, if you look at what is going on here, it's still looking very much bullish at this point in time, considering the impulsive move that started this week into that 1.22890 level. And from a technical and psychological perspective, we expect that for those who have bought the pound sterling at a very cheap price before moving this over 100 pips, before taking this 100 pips move, will at some point want to be closing in some of their position to take profit. And this of course would reflect on the chart as a retracement into structure, probably in anticipation of another wave of an uptrend move. Now, if that is going to be the case here, and if this bearish momentum we have been witnessing in the last 3 to 4 hours is something to hold on to, then let's project how far this retracement phase will go before the next momentum begins. Now, if you look at the structure here, to do that, we want to be bringing out our Fibonacci retracement tool, running it through the previous impulse leg and aiming at an area between the 50 and the 78.6% of the previous impulse leg, which will be falling exactly, if we do it appropriately, it will be falling between the 1.22150 and the 1.21750 area. So I would like to place this here. So this area here will be serving as a potential buy zone. That is, if we can begin to see some buy pressure resume around this area. So let's mark this level out on our chart. And I like to make my golden zone area a little bit lighter in yellow color. All right, so here we go, and let's delete the retracement tool as we no longer need it again. Now, with the situation we have here, we are looking at that area between the 1.22150 and the 1.21750 area for new buying opportunities. So if this retracement faces anything to come by, then we want to see price come into the zone and give us a setup that will suggest it is time to get ready to buy. And this may come in the form of a reversal pattern, like a double bottom structure, head and shoulder, or falling wedge to join that uptrend move. So at this point in time, it makes quite a lot of sense to exercise patience and let's wait for new structures to emerge before we jump into another position. Right now, price is back into the 50% retracement of the impulse leg that started this week. So let's see if the market will start forming some buy setup around this area. So we are going to be looking out for buy pressure, higher lows and higher highs within this area to give us the opportunity to join an uptrend move. So at this point in time, let's exercise patience. Now, there is one more thing I would like to emphasize here, and that is if price instead drops further to the downside, remember that we have a descending trend line here which we identified at the beginning of the week, which may likely be the retracement of this impulsive move right here into the structure where the appearance of buy pressure will be welcoming an uptrend move. So if instead of finding buy pressure within this zone, price goes on to break down the 1.218, then remember that we have another bust stop around that as descending trend line to look out for buying opportunity. And in fact, if we capture the lows here using our Fibonacci retracement tool, I think we should be having a golden zone area that will line up with that descending trend line. Let me do that correctly. So I will have to match this one. So we have the 50 right here. You can see what I'm talking about. You can see how price lines up exactly with that descending trend line here. So all of this range here are still areas where we can look out for buying opportunity. So we can look out for buying opportunities here, and we can also look out for buying opportunities within this area. So for me, everything is still looking very bullish at this point in time. We just need to exercise patience and wait for the buy setup to mature before getting ready to join an uptrend move. So we have a very wide zone here for buying opportunity between the 1.22200 area and of course the 1.21400 level. So patience on the GBPUSD is hereby required in this particular market. Then another thing that could help us to guide our trading decisions is this trend line here. So let's see how the market would react to this trend line. So hold on a second. Let me project this trend line into this. Okay. So we should extend this one out a little further. Oh. So where's the settings on this one? So let's extend it to the right hand side. Bring back our candle chart, and here we go. So we have a trend line here to work with as well. So let's see how the market will react to the structure. Be patient, and if you have any questions, feel free to let me know in this one. So price still remains very bullish at this point. The only condition that will make us want to sell for me is for price to drop below this descending trend line here, break down that descending trend line, then a retest of structure will be welcoming a selling opportunity. So I want to hold on to a bullish bias unless the breakdown of this descending trend line happens. So please mark out these levels, mark out those trend lines, and let's see how the market will play out in the next couple of hours. If you have questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if you have any questions before we run through the next assets on our watch list. I'm really running out of time here. All right. So in the absence of no questions, I want to assume we are on the same page. So we shall be moving right into the last asset on our watch list for today's trading session. So the next asset on our watch list for today is the XAUUSD, which is popularly known as the gold spot, and in fact is my favorite asset amongst the assets on our watch list for this week. And unfortunately, the week has started on a negative note for us, as the buy position we took advantage of had the breakout of the $1,978.50 level was finally taken out this morning with a loss, as you will see here, and we are going to be looking at how we are going to be recouping the loss we had incurred so far this week. So the week is still very, very early, so let's be patient here and let's wait for new setups to emerge. Though personally I do have a sell position running right now after the breakdown of that 1970 level happened this morning. So I would like us to run through the structure one more time to see how we are going to be managing our position going forward. Now remember, at the beginning of this week, price action actually started the week on a bearish note. Remember, we saw price drop into the 1965, came back into the 1978 area to give us a range to work with for this week. And of course, you know how we do it. We want to wait for either the breakout of the range to give us an opportunity to buy or sell. Now, since we were taken out of the buy position, price did break down the support line here at the 1965 level to trigger a sell position, and I do hope you are able to take advantage of that. If you did, you will currently be running with about 80 pips in profit at this point in time. And let's see how far this momentum is going to go. Now, one of the things I would like to recall our attention to is we talked about the bullish momentum that started this month, and we had an ascending trend line to buttress this. Now remember, yesterday we saw this ascending trend line which has been holding the bullish momentum since the beginning of the month of October, as you will see here. And you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we of course want to be looking out for structures and patterns that supports the idea of buying that asset. Now, if we consider the bearish momentum that started a couple of hours ago, I want to consider it to be a retracement back into the ascending trend line. So now this is where it becomes very, very important. Now price action is gradually approaching that ascending trend line, and once it gets into the zone, we need to move all stop losses and secure the current sell position while we exercise patience and wait to see how the market participant will be reacting to this ascending trend line. Now, depending on how they react to this trend line will be determining if we are going to be adding more sell position or get ready to join another wave of bullish momentum. Now, one of the things I'm looking out for here is if price will break down this ascending trend line, retest the structure, then we are likely going further to the downside. However, if instead we begin to notice that sellers are finding it difficult to break through the ascending trend line, and we begin to see some buy pressure resume, evolving into a reversal pattern, maybe a double bottom structure, head and shoulder pattern, or a wedge, then we want to be getting ready to join an uptrend move. Now, to make things easy for us to capitalize on the next line of action, we want to be having a key level here which will line up with the trend line. Let me see right here. So we have the 1950 and the 1955 area. So let's mark this level out here. So I would like to give this, it's considering to be a psychological level. So let's just mark this 1950 level. So you do want to be marking this one out on your chart right now. And then we also have something around here, the 955. Yes, 955. So let me just use a square. All right, so let's just do something like this, and then so let's call this area a temporary demand zone. Okay, so that's between the 1950 / the 1955 zone. All right, So we mark this level as this zone rather, as a temporary demand zone where we want to see how price will react to that structure. So I just have it right inside that box, and let's see what happens here today. And okay, let me delete this one. All right, so here we go. So you can see why I have identified this level here. Look at what has gone on in the past. We saw this bullish momentum began around this area. We saw some selling pressure around this area, which makes that area a very crucial area to look out for how price will react to that structure to give us an insight into the next line of action. And what makes the structure here interesting is the fact that it also shares a confluence with that ascending trend line we identified earlier. Now, if price gets into the zone, please move your stop loss on all sell positions to your entry point. I think price has tested that zone right now. Move your stop loss to your entry point, secure the current sell positions while we wait and see how the market will react to the structure. So if we see buy pressure here, reversal patterns, double bottom structures, we want to be joining an uptrend, and if price slices through this zone, we get ready to sell. Now, another thing I would like us to note here is that we have a descending trend line here, which has been supporting the bearish momentum since last week, Friday. Let me extend this one out a little further. So we have something like this. So price may still come back and retest the structure. It's still possible. And if price is unable to break through that descending trend line, that is break out of it, then we might likely be seeing downtrend. Now, to further confirm buying opportunities here, if price at any point in time does this and break out of that descending trend line, that is breaking out of the 1965 area, I want to be looking out for buying opportunities above the structure to the upside. So our center of focus today is basically between the 1965 and the 1950. So let's see how the market reacts to the structure. A breakout of the 1965, breaking out that descending trend line, retesting the structure will welcome buying opportunities, while the further breakdown of the 1950 will welcome selling opportunities here. So this is my view here on the XAUUSD, and I do hope I made myself very clear. But if you need further clarifications, feel free to let me know in the comment section. So I will take the next 10 to 15 seconds off, wait for your comments, and let's see before we round off for today's trading session. All right. So in the absence of no questions, I take this as a confirmation that we are good to go. And it's on this note we draw the curtain for today's Extreme Speed live session. It has been a wonderful moment with you guys today as we were able to attend to 4 major assets, which is on our watch list for this week. And in fact, we were able to identify simple setups that we are going to be using to guide our trading decisions for the New York session today. So we have the USTech100, popularly known as the NASDAQ. We have the USOILSPOT. We have the GBPUSD and, of course, the XAUUSD. Let's ensure that we exercise patience and wait for our structures to mature before we jump into any positions. So at this point in time, okay, for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today, and I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you'll become in using the strategy, eventually making you to make your own independent trading decisions using the information you gather in this community. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC. 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for the trading session for tomorrow, which promises to be an exciting one as we kickstart the second half of the new week. Do have a wonderful evening, everyone. Bye bye.